Have you ever looked at the headlines about this, booming economy and just thought to yourself, that's not what it feels like for me? Well, there's a really powerful reason for that disconnect, and it has a name, the K-shaped economy. So let's get into it. Right. Let's start with a big question that I think is on everybody's mind. We're constantly hearing reports of a strong economy, the stock market's hitting records, unemployment is low, but at the exact same time, our own budgets, they just feel tighter and tighter. So which one is it? Is it strong or is it weak? The truth is, the answer totally depends on who you ask. And this is exactly why. For one part of society, the economy really is booming. We're talking asset growth, rising wealth, things are great. But for a huge chunk of the country, it's just a daily battle for survival against costs that keep going up. These aren't just slightly different experiences, they're two completely different realities, and they're happening at the exact same time. This really gets to the heart of what we're talking about today, America's two separate economies. And believe me, it goes way deeper than just rich versus poor. It's really about two paths that are diverging, and they're literally reshaping the country as we speak. So what is this phenomenon called? Well, economists have a term for it, a K-shaped economy. The definition is actually pretty simple, but it's incredibly powerful. It's a state where different groups experience completely different economic realities simultaneously. Just picture the letter K in your mind. One arm shoots straight up, and the other one goes down. Let's break down exactly who is on those two paths. Okay, so on that upward path, you've got wealthier households, people who own assets, stocks, real estate, and highly skilled workers whose jobs are in really high demand. But then you've got the downward path, and that's where you find middle and lower income households, renters who are facing crazy high costs without building any equity, and hourly workers whose paychecks just are not keeping up. And here's the part that you really need to understand. This isn't just some temporary phase. This is not a classic recession where everybody kind of suffers together, and it's not a boom where everyone's boat rises with the tide. This is something else. It's a structural and maybe even a permanent split in our economy. So the big question is, how on earth did we get here? To figure that out, we have to ask a really fundamental question. In this new reality, who is actually driving economic growth? And I think the answer is going to surprise you. Just look at this number. It is absolutely staggering. The top 10% of earners in the United States now take home over 40% of the entire country's total income. That is a level of inequality that we just haven't seen in modern history. Now, let's flip that on its head and look at this. The entire bottom 50% of the population, that's half the country, earns less than 13% of the total income. This wild imbalance, this is the engine that's powering the K-shaped economy. And as you'd expect, this income gap translates directly to spending power. I mean, check out this chart. The wealthiest 10% of Americans are now responsible for almost half, 48% of all consumer spending. The other 90% of us make up the rest. What this means is that the health of our entire economy is now dangerously reliant on the spending habits of a very, very small group of people. And this quote just sums it up perfectly. When that top 10% feels good and they're out there spending on luxury items, fancy vacations, and expensive services, all the big headline numbers like GDP, they look fantastic. The economy seems super strong. But because that base is so incredibly narrow, if that one group decides to pull back, the whole system becomes incredibly fragile. Okay, so let's shift gears and talk about the other side of that K, the downward path, and what this feels like for the majority of people. We're talking about the great middle-class squeeze, where that feeling of financial pressure has become pretty much constant. And the pressure, it's coming from all sides, and it's all hitting the things you absolutely cannot live without. Housing and rent costs, they've just soared. Healthcare and insurance premiums just keep climbing year after year. The cost of education is a huge burden, and even the basics like gas for your car and groceries are taking a much bigger bite out of your paycheck. For so many people, wages just haven't come close to keeping up. And then you've got policy choices that just add to the pressure, and they do it in ways that aren't always so obvious. Take tariffs, for example. We often hear about them as this tool to protect American jobs. But what they often do in the real world is raise prices on everyday goods, basically acting like a hidden tax. And as this chart shows, it's a regressive one. And that just means it hits lower income households the hardest. Why? Well, it's because they spend a much bigger percentage of their money on essential stuff that gets imported, like clothes, electronics, and even some food.
A 10% price hike might be a small annoyance for a wealthy family, but for a family living paycheck to paycheck, it can absolutely break their budget. So, all of this brings us to what might be the most important question of all. Is this something we're just going through for a little while? Or is this economic split becoming a permanent feature of our society? Unfortunately, there are some really powerful forces that are working to lock this K-shape into place. Our economy is more and more driven by asset growth, which, let's face it, overwhelmingly benefits the wealthy. AI and automation, they're creating fantastic high-paying jobs for some skilled workers, but they're also displacing others. Labor's bargaining power has been getting weaker for decades, and high interest rates, well, they punish anyone who has to borrow money while rewarding those who already have it. These are not small things. These are deep structural trends. And, the consequences of this go way beyond just dollars and cents. When there's this massive gap between the official story, the economy is strong, and how people actually feel, which is poorer, trust in our institutions just collapses. I'm talking about trust in the government, in the media, everything. And that kind of distrust, well, it fuels political polarization and social unrest. So is this divide just inevitable? Are we completely stuck in this K-shaped reality forever? The short answer is no, but getting out of it is going to require some deliberate action. So let's take a look at what the way forward might be. Look, we got into this mess through a whole series of policy choices, which means we can get out of it by making different ones. This could mean really aggressive policies to lower the costs of essentials like housing and healthcare. It could mean targeted tax relief that actually helps the middle class, not just asset owners. It means smarter trade policy, investing in skills for the jobs of the future, and maybe rethinking a growth model that depends so much on just making assets more expensive. If there's one thing to take away from all of this, it's this. The U.S. economy isn't necessarily broken. It's split. And until we find a way to make sure that growth benefits more than just the people at the very top, the country is going to keep moving in two completely different directions. And the real question for all of us is, how do we start to close that gap?